I made $130,000 in the stock market in the last 3 years at just the age of 32. And I did it using a strategy that has allowed me to average a 42% return year over year, beating the S&P 500 by over 10%. And I did this using a 3-step approach that anyone at any level can use to make thousands of dollars with just an hour of research per day, helping them get closer to that dream of financial freedom in a couple years instead of a couple decades. You see, most people don't know how simple it is to beat the S&P 500, but once you understand a few simple steps, you'll be able to find stocks like this that have returned me over 85%. Okay, so first off, I didn't just wake up one day with 100 grand in my bank account. Absolutely not. But it was a wild ride filled with lots of trial and error and a sprinkle of good luck. So let's rewind to when I first dipped my toes into the investing world. It all started around 10 years ago in 2015 as a broke college student making less than $2 an hour, working off the usual day-to-days of checking off to-do lists and daydreaming about Ferraris, first-class trips around the world, and a mansion in Bel Air. I remember scrolling through Instagram back in the day and coming across posts of people sharing their success stories. That gutted me because honestly I thought, why not me? So I did what any curious person would do. I started thinking and asking myself, how can I make this dream a reality? Where can I start? In the information age, any new or average investor can get totally blindsided and fall into analysis paralysis if they don't revert to a basic skill that we are all taught at an early age. It can be overwhelming at first, especially when you're at the tail end beginning your journey. But just like going to the gym, it's all about reps. You'll struggle at first, but 60 days in, you can literally start seeing a change in your body. This skill is just as important now as it is when you start your journey in life as a baby. And that skill is learning. All right, let's talk about investing, but in a way that's more level up your finances than Wall Street Journal stuff. Think of it like jumping into a brand new video game, say Elden Ring or God of War, etc. You wouldn't just charge in blindly and go straight to the boss fight, right? You'd want to know the basics, like how to use your weapon, your available magic skills, so that you just, don't die immediately. This is all so that you can go from novice to master in the game to take on the biggest boss at the end. Investing is kind of the same deal. You're entering into a world with its own rules, characters, which are the companies, and challenges, which are the market crashes. Just like you wouldn't want to face a tough boss in Elden Ring without the right gear, you don't want to throw your hard-earned cash into the market without understanding the basics. Here's a 4-step lowdown. Number 1, you learn the controls in gaming. This means mastering the buttons and combos. And in investing, it's about understanding different investment types like stocks, bonds, etc., managing risk levels and how the market actually works. Number 2, you study the map. Gamers explore the game world to know where to go whenever they need to achieve a certain task. The same way investors need to understand the financial landscape, like what are the different markets, what factors affect prices. Number 3, you read the lore. Every game has a story, typically a protagonist on a hero's journey, and in investing, it's about reading, researching companies, industries, and economic trends. You wouldn't go into a Final Fantasy game without knowing who the bad guys are, would you? And then lastly, number 4, practice makes perfect. Whether it's nailing that perfect combo to finish off your opponent or making smart investment choices, experience is key. Start small, learn from your mistakes, and gradually level up your portfolio. Just like in gaming, there are different levels of difficulty in investing. You can start with an easy mode by investing in index funds or ETFs to get your feet wet. Then as you gain experience and knowledge, you can try more complex strategies. The bottom line, 99% of people I work with don't want to be a noob investor forever. Same thing for yourself. Take the time to educate yourself, understand the risk, and make informed decisions. Think of it as unlocking achievements in the game of life, which the rewards are definitely worth it. So back to my story. Here's the thing. I didn't want to just know about investing. I wanted to do it. In this world, there are 2 types of people. There's talkers and there's doers. Majority fall into first category and end up talking about how others are succeeding in life. Just like Sam in Game of Thrones, who said, and I quote, "I'm tired of reading about the achievements of better men. I wanted to be on the front line fighting the dead and protecting the living. In my case, of course, it's less fatal. I just wanted to make some money and take care of my family. So I opened up a brokerage account and deposited $100. Yep, that's right. I started small. My first investment, I bought Barclays Bank. Let's just say I played it super safe. But I had no reason as to why I bought Barclays. I bought the stock because it's a popular bank. No research, just shooting from the hip. And this is something 99% of new investors I've worked with typically do, ending up leaving a lot of money on the table because they don't know any better. And then they go ahead and put themselves through a roller coaster of emotions where some days they're in the green, celebrating gains like it's their birthday and building castles in the sky. And other days, well, checking their phones, feeling like a heartbroken ex, watching the numbers plummet and feeling like they've made the worst mistake of their lives. And it's all because they don't know how to do this single important aspect of investing. An investment philosophy is really the single most important thing you can have in your arsenal to make sure you survive and win the game of investing in the long term. Imagine you're building a killer Lego set, like the Millennium Falcon, for example, or that massive Hogwarts castle. You can't just rip open the box and start sticking bricks together randomly, would you? No. You'd have a plan, a vision, a style. That's your building philosophy. Your investment philosophy is kind of like the same thing. It's your personal set of rules and guidelines for how you approach investing. It helps you answer questions like, what are your goals? Are you saving for retirement or a down payment on a house, or just trying to grow your wealth over the long term? Like, are you building a sturdy Lego house or a spaceship that can actually make the Kessel run in less than 12 parsecs, crazy stuff. But how much risk are you comfortable with? Are you okay with potentially losing some money for the chance of earning higher returns, or do you prefer safer, more stable investments? Another question you'd ask is, what kind of investor are you? Do you like to research individual companies and pick stocks for yourself, like a Lego master builder, or would you rather invest in a broad market index fund and let it ride? Having a clear investment philosophy helps you stay focused and avoid making impulsive decisions, especially those based on hype or fear. It's like having a blueprint for your Lego masterpiece. It keeps you on track and helps you achieve your goals. If you'd like a head start with writing yours, I've made my investment philosophy public. You can go ahead and have it for free. Click the link in the description and go ahead and grab it. Here's where it got interesting. Over the years, I learned a skill that the masters of the game are extremely great at, and that's being patient. Post the pandemic, I didn't panic sell. Instead, I started those market movements, and slowly I started to understand concepts like business cycles that people like Ray Dalio speak of so fondly. And that's when it hit me. I needed to think more like Ray. If you look at his investment philosophy, it's super simple. A 5-year-old could do it. In theory, it's setting up a routine to regularly invest every month, like Dave Ramsey. And I focus on companies with solid fundamentals and not just hype. And before I knew it, my initial investment started to snowball. The compounding effect, pure magic. But it was down to this final approach that separates winners from losers. It's a plan that sports legends like Jerry West and Pat Riley have used their whole careers to create dynasties. When you use their approach, you wouldn't just recruit 5 players who all play the same role, right? You need a balanced squad with diverse skills and strengths. Structuring your investments is kind of like the same idea. It's about diversifying your portfolio and strategically allocating your money across different asset classes, sectors, and even geographical regions. Here's the deal. Don't put all your eggs in one basket. Just like an esports teams need a mix of roles, your portfolio needs a mix of investments. Don't go all in on one stock, no matter how promising it is, even if it's Tesla or that new hot gaming company everyone's hyped about. Spread your money across different companies, industries, and asset types, stocks, bonds, real estate, etc., to reduce your risk. And then you'll go ahead and pick your players strategically. In sports, each player has a specific role and expertise. Similarly, different investments play different roles in your portfolio. Some might be growth but risky, like your star player, while others might be stable and provide consistent income, like your reliable support players. And then lastly, you want to adapt to the meta. So the meta is constantly evolving with new strategies and new team compositions. Similarly, the market is always changing, so you need to stay flexible and adjust your portfolio as needed. This might mean rebalancing your investments periodically or adding new players to your lineup. Think of yourself as coach and manager of your team, and you need to assemble a diverse squad. Strategize your plays and adapt to the changing market conditions to achieve your financial goals. By structuring your investments thoughtfully, you can build a resilient portfolio that can weather market storms and help you achieve your long-term financial objectives. It's like having a well-rounded sports team that can dominate the competition. No matter what challenges come, they're all good, and they're all good to go. Now that you know the building blocks that I used to go from a broke college student making $2 an hour on their first job to an investment portfolio of $130,000 in the last 3 years, you can do it too. However, building and managing a successful portfolio takes time, effort, and expertise. It requires continuous learning, constant monitoring, and the ability to navigate the ever-changing market landscape. We give away information that you need on this channel so that you can grow your portfolio from 0, 1, and 10, and eventually $100,000 just for free. So if you want to take it a notch higher, I'm giving away a full course on investing completely for free to arm you with the tools to become a successful investor. We're in the process of creating this course, and you can sign up for early access and get notified once it's out in early 2025. So go ahead and click the link in the description to reserve your spot, which won't cost you a single dime. And you'll be the first to get notified once it's live. There's more gems like this that I share on this channel to help you get started with investing and learn more about stocks. So go ahead and click this video here to get more valuable insights. Thanks for watching and have a great day.